Core 7, Module 4, the consultation. After gathering and analyzing all the information from the application, mortgage planning questionnaire, and the documentation checklist, it's time to present to your client in a professional manner. This module focuses on the consultation and includes an example of the scripting to use in a typical consultation, broken down step by step. Now, in opening up the meeting, first thank the client by saying, "How are you today? Thank you so much for taking the time to get me all the information up front and for the opportunity to work with you. I really appreciate it." Then, be sure to endorse the referral source. We do this by saying, "First, I want to congratulate you on selecting John Smith as your realtor. He does a fantastic job for all of his clients. You have made an excellent choice." This is a very key point because your referral partners are counting on you to make them look really good to the client. Many times, this could be the difference between them selecting one person versus the next. The next step is to get permission to ask about the client's financial team and refer your Core 7 partners. Here is the way to segue into that conversation. "Mr. Smith, before we get started on discussing the specifics of the mortgage, can I have your permission to ask you a few very important questions about your financial team?" The client always responds yes to this. Asking permission to address the topic sets them at ease. Now you want to take it one step further and ask additional permission to ask about their financial team. The more permission you get, the easier it is to suggest that that client speak to someone on your team. The scripting for this is, "Now, Mr. Smith, you may already have these professionals in place, which is great. And if you do, it still helps if I can gather their contact information just in case I need to reach out to them for any documentation we may need to expedite the processing of your loan. Is that okay, and does that make sense?" Either way, you want permission to ask about their team. If they don't have a certain advisor, refer your Core 7 partner. If they do have an advisor, get permission to contact that person. Now you can ask about all of the Core 7 professionals or just a few selected ones that are relevant based on the information you obtain from the pre-consultation worksheets and the financial documentation. These questions are asked for two specific purposes. Number one, to refer your Core 7 business partners if the client is either unhappy with their current professional or does not have a relationship with a professional in that particular field. Number two, to get permission to make contact and introduce yourself to your client's current professional relationship. If they are happy with the service, it's a win-win for you either way. You either get to refer someone on your team or speak with a potential new business partner that you and your Core 7 business partners can network with. Depending on the situation, there are only 3 answers that your client can have to these questions, and there are multiple business building opportunities in each situation. Number 1, the client has no relationship with a particular Core 7 advisor. Possible answer number 2, the client has a poor relationship with a particular Core 7 advisor. And number 3, they are happy with their current relationship. Now the best tactic is to use a little questioning technique I call the referral generator. The referral generator is, how is your relationship with your, whatever profession it may be, who specializes in X? Let me repeat that because this is the question that helped me refer over 50 pieces of business to each of my referral partners every year. How is your relationship with your, whatever profession it may be, who specializes in X? Now, as discussed in the Referral Pathways module, the strongest referrals happen organically as part of the Core 7 professionals business. For example, mortgage originators, the strongest referral pathway is for financial advisors and property and casualty insurance agents. For our purposes of these modules, we'll focus on these professionals only, but you can find scripting appropriate for other cases in the Resource Center. So for example, if you are looking to refer the financial advisor on your team who specializes in retirement planning, you would ask, Mr. Smith, how is the relationship with your financial advisor who specializes in retirement planning? To refer a financial advisor who focuses on insurance and disability insurance, you would ask, how is your relationship with your financial advisor specializing in protection if you were to pass away or become disabled and are unable to earn income? Another example for the financial advisor is, how is your relationship with your financial advisor who specializes in helping you plan for retirement, putting your children through college, and for providing care for an elderly parent? This brings up retirement and college funds. Again, you are not selling these products, you are just helping your clients put their team together. Another example for the financial advisor, if the client is a self-employed business owner, would go like this. Mr. Smith, how is your relationship with your financial advisor who specializes in business planning for business owners? The business owner is many times a better referral for a financial advisor. Not always, but there are some financial advisors who only work with business owners. It can definitely be a profitable niche for a financial advisor. So if you as a loan officer get good at referring business owners, the sky is the limit. Now, to refer a property and casualty insurance agent, you would say, how is your relationship with your property and casualty insurance agent who specializes in umbrella policies to protect you if you are sued? Now, after you go through the questions regarding your client's team, whether it is their whole Core 7 team or just the professionals you choose to refer, the next step is to refer your Core 7 partners. The way to set this up is by saying, Mr. Smith, I am going to make the introduction to the advisor on my team by email after we tackle all the mortgage details. Does that make sense? By doing this, you now have permission to refer your partner and can move on to discussing the loan options. After you discuss the loan options, you can then make the introduction by email to make sure that your client and your Core 7 partner connect. The next thing you want to do is thank your client for answering these questions and segue to the mortgage discussion. It is a good time to give credit to the referral source. We do this by saying, thank you so much for answering all those questions. Your realtor, John Smith, really wants to make sure the purchase of this home fits into your overall financial plan. Again, always support your referral partners as much as possible. Now it's time to jump into the mortgage loan discussion. Here is how to lead into it. Now let's discuss your financing. I'm not sure if John Smith told you, but I take a different approach than a traditional loan officer. My goal is to help you integrate the mortgage you select into your overall long and short-term financial and investment goals and your payment, equity, and cash flow objectives. With that in mind, help me understand what are your goals regarding this home loan. Now that is a very important script, so let me repeat it. Now let's discuss your financing. I'm not sure if John Smith told you, but I'll take a different approach than a traditional loan officer. My goal is to help you integrate the mortgage you select into your overall long and short-term financial and investment goals and your payment, equity, and cash flow objectives. With that in mind, help me understand what your goals are regarding this home loan. This language shows that you take a different approach. You will find that your client is going to be more interested in what you are saying, and it will differentiate you from other mortgage originators who are just trying to quote the lowest interest rate. The key at this point is to listen and ask more questions based on the information you receive. The next step is to discuss their loan options based on what they qualify for, what you learned from their documentation, and anything else they will tell you. Now, we are not going to go into detail on mortgage loan options because there are many different ways to structure loans and many different products to suggest. They all have different guidelines and different ways they can fit into your client's overall financial plan. After you discuss the loan program and the loan structure, it is time to discuss rate movement, the market, and closing costs. By closing costs, I mean including the attorney's purchase and sale fee and owner's title insurance if it is a purchase loan. When discussing rate movement, the key is to explain that interest rates are based on the mortgage-backed securities market, and they change constantly every day based on economic events. The most important thing is that the mortgage is structured to integrate into the client's overall financial plan. It is critical to explain to the client that sometimes the lowest rate with the wrong structure can be much more expensive than a competitive rate with the proper planning. To help the client understand, sum up the relationship between rates and the economy in a very simple way. Good economic news, like a stock market rally, is unfortunately bad news for mortgage rates. They will go up. Bad economic news, like a high unemployment report or a political uprising, is unfortunately good news for mortgage rates. They will go down. Mortgage rates move quickly, just like the stock market. So you want to explain to your clients that it is important to have you as an advocate to help them make the best decisions. On a purchase loan, after discussing rates and how the market moves based on economic activity, I always offer the cash flow analysis cross-sell to refer the financial advisor partner on my team. Here is the exact scripting to use, and this is critical. Mr. Smith, all lenders, including myself, calculate what a client qualifies for a purchase based on what are called debt-to-income ratios. Debt-to-income ratios are set by the bank. These ratios include your housing payment and the monthly debt that is on your credit report and financial documentation. These ratios do not include what you may spend on entertainment, clothing, your children, or any hobbies you may have. Mr. Smith, I always suggest that my clients speak with the financial advisor on my team to do a full cash flow analysis to get a clear picture of how this home purchase will affect their financial picture. There is no obligation, and I think it will be time well spent. Would you mind if I made the introduction to the financial advisor on my team? At this point, you have already found out if your client has a financial advisor or not. Now you have permission to introduce your Core 7 partner for a cash flow analysis. Finally, there are 3 things to do immediately after the phone call or meeting is over. Number 1, add the client to your database for ongoing email and direct mail marketing. The 2 services we recommend are the Loan Toolbox Platinum Plus version for the email marketing and Brian Buffini's referral system for the direct mail. Number 2, send the client an email introducing them to the financial advisor on your team for a cash flow analysis. A copy of this email is located in the Resource Center. Number 3, if they qualify, email a pre-approval to the client and copy the referral source. Include another strong endorsement of your referral partner's services. In this module, we focused on steps in the consultation and reviewed example scripting to use that is tailored to the most common referral pathway for mortgage originators. We also identified ways to add value to the client and how to identify and take advantage of referral opportunities. In the next module, we'll go over the Core 7 process for handling an accepted offer.